Hey, are you a dentist or a business owner that's been thinking about financial planning but aren't sure exactly where to start? Is getting your finances in order on your to do list, but you still haven't gotten around to checking that box? If financial advisor and financial planner mean the same thing to you, you might want to stick around for this episode of Getting Down to Business. Today, we have two guests, Shane Morrow and Shannon Fowler from Ironbridge Wealth Counsel, giving us some insights into the importance of financial planning for dentists. This is going to be a 3-part episode, so go ahead and click that subscribe button and ring that notification bell so you never miss an episode. And also go ahead and smash that like button for the YouTube algorithm. Now, let's get down to business as Cheryl Burgmaier, who is also a certified financial planner, starts the conversation with our two guests. Let's get into it.
Just so that people know who you guys are and how you operate. I kind of know, but it'd be nice for others to understand exactly how Ironbridge works with their clients, because it's a little bit different than just, somebody that you'd have at one of the other brokerage houses.
Family, right.
Can you give a little bit of background on why Ironbridge is different?
So Ironbridge is a national ensemble financial planning firm, and national in nature that we have offices in 13 states through now 4 different time zones. Now we will have an office in Alaska. So it's national in nature. Ensemble basically indicates that we have a team of specialists. So even though all of us follow a very similar financial planning process and most of us are certified financial planners, ultimately our clients are diverse in terms of their nature. Some of us work with private practice doctors, dentists. Obviously, that's a little bit more in my ballpark. Multi-generational business owners, athletes and entertainers, people in the construction industry. You look across the board, and we're really a team of specialists, both on client profiles, which is very unique because understanding the psyche of that avatar, that ideal client is super important. But also specialists in terms of different technical backgrounds. There's a massive difference in expertise in terms of nuances in estate planning, which is different than tax planning, which is different than insurance and investments. You say you're the best in all those different domains. I think it's very probably foolhardy and not being intellectually honest. So we're a team of specialists, both on client profiles and having different proficiencies in different technical expertise areas. The additional differentiation is we're 100% independent. So we're not beholden to a corporate owner that has production requirements or certain protocols we have to follow. We really take the mindset of fiduciaries of what's the best thing possible for clients and how do we best execute on the goals and objectives of the individual, absent any home office or parent company regulations. So we are independently owned internally, and we have no desire at this point to have any external funding or external ownership, because that just provides, in any way, shape, or form, it changes the culture. I think the other component is that we provide continuity across the firm. So anytime you're working with a individual professional service person, whether it's in tax or financial planning or in dentistry, the question is ultimately, that's a great practitioner, but what's the business behind them to support that person? One, if something happened to them, or two, it's really difficult to be both a great practitioner and a business owner and running the books and doing all these other things. So we really provide that continuity from a firm standpoint to make sure that whoever's working with the individual is really has the mind space freed up to work purely in that individual and not be worrying about, hey, what's going on our insurance policy that we do from a corporate standpoint.
Well, and I can speak to that. Working with Ironbridge, some mutual clients, what's really nice is sometimes even when Cole Stoneman, who's not on the call, but worked with him on a couple things, he'll be like, oh, wait, let me reach out to this other person in Ironbridge who has a specific knowledge and expertise in the area, so we can get a really good answer for that. That's what I really appreciate, is that there's just experts in areas that, because it's hard. There's so much to know and so much to help clients with, and every client is a little bit different, that sometimes you can't be a jack of all trades. So Ironbridge does have kind of the expertise across the board in different areas, which I love.
Yeah, it's very obvious in other industries. Medical and dental is an easy one, right? If you're a general dentist, you're typically not doing, oral surgery type work. You have
Right.
partnerships in those different specialties. And in every other industry, the more specialized, the more complex or more unique the procedures are, the more specialization there is, right? The orthopedic surgeon's not doing heart surgery is the easy, example.
Yeah, I think a lot of times people put financial advisors in the same category. It's just one big broad category. And essentially where we're trying to differentiate is like you said, an investment advisor specifically handles your investments. Usually they're just concerned with all of that. Financial planner is managing your life, essentially, like looking at all aspects and making sure that a decision in one area isn't going to have a negative impact in another, and having a pulse on the entire situation. So
Yeah, because a decision made in a vacuum can have a significant impact in another area. I can just give a simple example, and this is, so as a tax advisor, we say, okay, when you sell a practice, please don't put all of that money in the market. Please just don't do that, because there's a little thing called taxes that comes up that year after, when, you sell in 2024 and 2025, you have to file taxes and pay taxes. There's typically a gain, hopefully. So having the conversation about, yeah, great idea. You got all this money, put it in the market. No, we don't necessarily want to do that. And Shane, you may have a different take on this, but if you need that money to be liquid, do not put it in the market, because we had this circumstance where a client did not necessarily follow the advice. Then taxes came due, market was down. It's a double whammy.
Yep.
And it was really unfortunate, and it just snowballed. That's why looking at the whole picture and talking to someone about the whole plan is really, really important.
A simple example, right, especially with private practice dentists, is setting up a cash balance plan, right? Everyone wants to save on taxes. It's a great way to save on taxes. To do that or not do that really is such a loaded question, because you need to know operating cash flow from the practice. Is it consistent? Is it stable? Where's the revenues coming from? Because you need the funding on an ongoing basis. What's the personal cash flow needs, right? What's the effective tax rates? All those things dovetail into a decision that is multifaceted. The census data of what the staffing ages are and their income levels, all those really need to be factored in to say, is the tax benefit worth going through that process? And that's just a very simple example, but it really shows, in my opinion, it starts on the business accounting side of saying, what's the free cash flows? What's the personal cash flow needs? And then where's the itemization of those? Because to your point, selling a practice we need to know the lifestyle practice needs. You need to know what they intend for help with their kids or grandkids or whatever that may be. All those things go into the decision of, should I invest or should I not? And then it's really, what should I invest in? And people put that typically at the bottom of the pyramid. It really should be at the top of the pyramid in terms of probably the least important thing in that decision set.
And that's coming from the investment guy.
Hey, the investment should be the boring part, candidly. That should be the easy part at the end of the day once the financial plan is done.
Yeah.
What to do and how to do it should be dictated by the financial plan, not the reverse. From
a financial planning perspective, and so you have a young doc that comes out of dental school, and now I think the average debt that they're graduating with is like $300,000 if they're lucky, if they're not a specialist. If they're a specialist, I've seen some way higher than that, and so they're balancing. Here I graduated, now I'm starting this new job. I'm learning how to be efficient as a dentist. I'm learning, really, really learning how to practice.
Right.
Many times they become an associate, or they buy into it, they buy a practice. There's a lot of financial planning that goes into even that aspect, because we always think of financial planning. I always think, before I was involved in this industry, it was like, I always thought of financial planning as like what we talk about, right pre-retirement, but you can't wait till pre-retirement, right? And I get really excited when I'm talking to the young dentists about their finances, because it's like, okay, if we can get them to have good habits early, it sets them up for success later. So can you talk a little bit about some of those things that maybe you talk to some of the younger dentists and the planning aspects of that?
I think the analogy is like, flossing, right? The little things every day kind of add up to say, are we going to have issues much later in life or not? And even though I get yelled at often when I go to the dentist for,
Not flossing.
I floss more than I actually do. They know, and it's like, we know, right? Good financial habits or not. I would say first and foremost, they got to kind of figure out a path. And I look at it as very maybe overly simplified, but there's two general paths. Let's just say in general dentistry, like the corporate dentistry route and the private practice route. And that is a big decision to make because there's different decisions and different benefits available in different cash flow situations depending on that route. And it's not in either path you're going to go through and think about. First thing is, how much should I be saving? And that's really going to be predicated on cash flows. So at the end of the day, we're huge proponents of cash flow management, which dovetails into taxes, which dovetails into personal or practice production. But the basic things you should think about, which most people don't. So the easy thing is save as much as it until it hurts, is kind of the line I always use, because lifestyle creep is a real thing. And if you can have those good habits now, it's going to translate into later in life. And when you have less money, you have smaller problems. When you have more money, you have bigger problems if you don't set them up right. So I would say save till it hurts, prioritize paying down high debt amounts. There's some nuance, obviously, if you're married and how you're filing, that is more in your court, Cheryl, with filings separately, depending on debt forgiveness, and that gets a little bit more nuanced. But we're not huge fans of debt in general, and paying that down is a big thing because it gives you optionality. And
Right.
optionality as you get older is massively important. But the thing that most people don't think about when they're starting out their career is some of the really easy, basic things: estate planning and insurance planning. And those are things that are very inexpensive to do when you're young and get really expensive if you don't handle them early in life and don't get on top of that. So insurance planning is pretty simple in that you have especially debt loads and things like that. If you're in good health, insurability cost is less expensive when you're healthy and it's more expensive when you're not healthy. It seems really basic, but locking in health ratings is hugely important if you can do that. The second thing is basic estate planning. And this is I don't care if it's financial professionals, medical professionals, smart people, whoever it may be, no one takes care of their estate plan, right? No one wants to think about death. No one wants to think about liabilities, but it's not just for when you have a lot of money and you have estate tax. It's about asset protection. It's about control. And it's about making sure that whoever handles your situation, God forbid something were to happen to you, isn't left with a burden logistically. And when life is relatively simple, you can check that box pretty easily. The problem is most people don't, and they wait till life gets a little bit more complicated and have to unwind that. So
It's interesting how many people I come upon that don't even have a will and they have children. And I was like, oh my goodness, the first thing that has to happen is we need to get some of this taken care of. When you're talking from a state perspective, what are you talking about? Do you think trusts? Do you think just will? Do you think, I guess and I guess the answer is, Kelly, it depends.
You're right, it depends. And we're not attorneys and we don't draft documents, but we help educate people about the differences.
Yeah.
And sometimes it's just getting a simple will and a power of attorney and a medical directive on file. Sometimes it is setting a trust because there are different circumstances that a trust can provide asset protection benefits and other family situations that you may want to leverage a trust from a control standpoint and other aspects. The point is you should have a conversation and understand those different nuances. There is no simple answer, but the answer of not talking about it is the worst answer of them all.
The other thing too, it's like if you don't have a plan, the state has one for you, and you're probably not going to like their plan. And so it's just it's that control, but it's also being able, like Shane said, not burdening whoever is left. You know, you're dealing with enough when it comes to loss of the person to have to go through all of this other stuff is just, it can be debilitating, and it's just a huge, the most loving thing that you can do for your family is to just get that stuff taken care of early on, because it's out of sight, out of mind. Peace of mind.
Peace of mind is something that we're all actively pursuing, I think. We want to thank you for joining us on today's call. And hey, if you're curious about Ironbridge Wealth Counsel, we're going to go ahead and leave their contact information in the description of this video. Of course, as always, you can visit our website, HindleyBurgmaierGroup.com, to learn more about the services that we offer, book a consultation with us, or if you're a business owner looking for accounting and you haven't found that right accountant, go ahead and visit Burgmaier & Associates. So all that information is going to be down in the description, and we are going to be very excited to bring you more value nuggets, more truth bombs next week on Getting Down to Business. Until then.